While traveling through India in 2013, a college dropout discovered the untapped potential for managing the nation's low-cost motels. When his firm was valued at $10 billion in October 2019, its revenue increased by up to 3.5 times. It's simple to assume that the topic at hand is Ritesh Agarwal's successful startup Oyo Rooms. With this funding, Oyo officially becomes the most prosperous unicorn in India. As of 20th August 2021, Oyo has successfully raised an astounding $4.1 billion. Beyond India, the company has established a presence in China, Malaysia, Nepal, and the UK. This is some information on Oyo Rooms' subsidiaries, expansion, and difficulties. Ritesh Agarwal established Overworked Stays in 2012 to make it possible to list and reserve inexpensive lodging. He switched Overworked to Oyo in May 2013 after conducting months of research and staying in several bed and breakfasts, guest houses, and boutique hotels throughout India. Oyo collaborates with hotels to provide top-notch visitor experiences in all cities. Ritesh Agarwal received a $100,000 award from Peter Thiel shortly after founding Overworked Stays as part of the Thiel Fellowship, which had a significant impact on the direction of his business. Now, Oyo Rooms employ 17,000 people worldwide, with about 8,000 of those people living in South Asia and India. It is now acknowledged that Oyo Hotels and Homes is a full-fledged hotel chain that leases and franchises assets. Thousands of hotels, vacation homes, and millions of rooms were added by the startup over a 6-year period in hundreds of cities throughout India, Malaysia, the United Arab Emirates, Nepal, Brazil, Mexico, the United Kingdom, the Philippines, Saudi Arabia, Sri Lanka, Japan, Saudi Arabia, the United States, and other countries. Even the renowned Taj Hotel chain and the Oberoi Hotel network are valued higher than it. Oyo's total revenue, which was 13,413.26 crore rupees in the prior fiscal year, FY20, and is now at 4,157.38 crore rupees, according to the company's most recent DRHP filing, decreased by almost 70% in FY21. These are all examples of the negative consequences of the pandemic, which confined the Indians primarily to their homes. Here, it's crucial to remember that the company's losses shrank by a staggering 70%. When compared to Oyo's losses of 13,122.77 crore rupees in FY20, losses came to just 3,943.8 crore rupees in FY21. This is because the company's expenses, which were recorded at 22,800.12 crore rupees in FY20 but decreased to 6,936.07 crore rupees, have decreased dramatically. Due to multiple layoffs, the company's expenses for employee benefits also significantly decreased by 63% to 1,742.12 crore rupees in FY21 from 4,765.28 crore rupees in FY20. Once the lockdown was eased this year, 2021, the industry that unquestionably took the worst of the pandemic is hoping to recover. By obtaining funds from the US software behemoth Microsoft as part of a strategic investment, Oyo took its first step towards expansion. In addition to Microsoft, Oyo has a number of other key investors, including the Chinese ride-hailing powerhouse Didi Chuxing, the Southeast Asian ride-hailing behemoth Grab, and the American online travel and housing marketplace Airbnb. The total valuation of Oyo is $9.6 billion, as of 20th August 2021, after the company raised $5 million from Microsoft. To date, Oyo Rooms has purchased 8 businesses. The latest business that Oyo purchased was Danmika, a data science company based in Denmark, on 2nd September 2019, for $10 million. On 9th May 2022, Oyo then purchased Direct Booker. The Croatia-based hospitality service business currently works with more than 3,200 residences and has served over 2 million clients. It is anticipated that the acquisition of the business formed by Nikola Grubelic and Nano Dubretic will increase Oyo's footprint in Europe, particularly in Croatia. As of 13th January 2022, Oyo had raised a total of $3.1 billion. On 13th January 2022, the company raised $29.72 million in investment. On 16th December 2021, Oyo raised an unnamed debt financing round. On 20th August 2021, the Ritesh Agarwal business raised $5 million in a Series F financing that was led by Microsoft. To date, the company has gone through 22 fundraising rounds. The lead investors group for Oyo includes companies including Softbank Group, Lightspeed Venture Partners, Airbnb, Sequoia India, Microsoft, Chinese Didi Chuxing, Gab, and more. According to sources, Oyo is planning to list on the stock market soon and would probably file its draft red herring prospectus, DRHP. Through its IPO round, which will include an offer to sell shares from the current shareholders as well as some new issues of shares, the company hopes to raise about $1 billion. According to the most recent sources, Oyo has 3 investment banks on its shortlist, JP Morgan, Kotak Mahindra Capital, and Citi, for its IPO on 9th August 2021, which is expected to be valued over $1 billion. Due to the COVID-19 pandemic's impact, the hotel and hospitality sector was one of the most badly hit. Oyo's planned initial public offering is struggling. This is due to allegations of unfair and deceptive business practices made against the company in a letter to SEBI by the Federation of Hotel and Restaurant Associations of India, FRI, the organization responsible for overseeing the hotel industry, as published on 26 October 2021. Oyo was previously accused by FRI and the Competition Commission of India of adopting anti-competitive business practices, CCI. FRI further mentioned that the antitrust agency is still conducting an advanced stages of a probe. In addition, the corporation notably failed to disclose the information. According to the regulatory body for the hotel, Oroville has tried to confound investors by conflating irrelevant issues relating to the interim relief sought by Ruptup Solutions Private Limited, Tribo, and Casa to Stays Private Limited, Fab Hotels, and has not made a fair disclosure about the nature and consequences of the CCI-directed investigation. These alone are sufficient grounds for the IPO of Ritesh Agarwal's Oroville Stays to be refused, as no previous instances in which a firm was under CCI investigation was permitted to proceed with the IPO. Challenges faced by Oyo Rooms. Complaints of unpaid dues by Indian hotel partners. Police complaints by hotel groups and hoteliers. Protests by US hotel owners over Oyo's entry. Lack of profitability. Scrutiny by Competition Commission of India. Questions about asset-heavy model. Protests by Indian hotel owners and associations. The rivalry between hotels, associations, and Oyo was first identified in December 2018 and has since caused havoc in the hospitality sector. At the time, organizations from Mumbai, Delhi, Mysore, Bangalore, Kolkata, and Hyderabad joined forces with the Hotel and Restaurant Association of Gujarat to consider legal action against Oyo.